I'm Hans Kuttner, visiting fellow at Hudson Institute, and I've just completed a study called The Move to Digital Payment When the Check is No Longer in the Mail. My mother is one of the 60 million Americans who receives a monthly benefit payment from the federal government. Her Social Security check shows up in her bank account at the beginning of every month via direct deposit. Why does she do this? Well, because it's easier for her. She doesn't have to make a trip down to the bank. But about 9 million of those people still receive a monthly benefit payment check. And why do they do that? Well, for a variety of reasons. Most commonly, they don't have a bank account. And so what do you do about people who don't have bank accounts? Well, beginning in June 2008, Treasury introduced a prepaid debit card that would allow people who don't have bank accounts as an alternative to getting a check to have their money placed on a prepaid debit card. Now Treasury proposes that we move ahead and realize some of the savings that can be had here by having everyone get a prepaid debit card if they don't want to have a direct deposit of their payment. That would be the end of the government check. Two phases. One, this May, no more checks for new recipients, and then in March 2013, no more payments via check for current recipients. And this could lead to a variety of results. One end of the spectrum, organizations will work with financial institutions to devise prepaid debit cards that work out pretty well as an alternative to the government system, and everyone signs up for a prepaid debit card, either one offered privately or through the federal government, and it's not much of an event. At the other end, there aren't many of these cards, and it's a disaster. As people stand in lines come March 2013, they don't know what to do, they don't know how to make these cards work, and government has egg on its face. Well, where in the spectrum we're going to wind up probably depends on some things that haven't played out yet, particularly regulation of the debit card industry. Under last summer's Dodd-Frank financial legislation, the government will be in the position of regulating debit fees. And if banks pull away from the debit sector, well, those favorable scenarios seem less likely. Now, I'm approaching this because it's an interesting question of when and how does government adopt technology. This technology is going to save the government $125 million a year. And thinking about this, comparing how the private sector might deal with a similar problem, it seems that the government is acting slower than it might. For example, if you were a private sector financial institution and you had this problem, all these people with these paper checks, you might try to provide incentives for people to move away. You might have already put in the mail to them offers saying, hey, there's a $25 gift card for you if you're willing to give up your paper check and move to a prepaid debit or direct deposit. It might also be the case that you'd say, well, gosh, look, some of these people, they want to get this check because really having a check is mean something to them. And it's costing us about 90 cents a month to get out there. Maybe they're willing to pay a fee for this. And so maybe we wouldn't be trying to push everybody away from direct deposit if there are those who want to pay the fee. So this is another case study in how government does and does not adopt technology. And it's an interesting case, once again, of how government probably is going slower than it really should in adopting technology.